So by doubling down on one financial concept, I went from zero network, zero knowledge, one property, and $10,000 in my bank account to having a portfolio of 9 properties and 4 businesses that now do a combined $100 million a year in sales. So in this video, I'm gonna break down this one financial concept and give you my blueprint so you can steal my plan and apply it in your business. My name is Chris Lopez, and I live, invest, and run my businesses here in Denver, Colorado. And what we're doing right now is walking through one of my studios because I'm also the host of the Denver Real Estate Investing Podcast. I have used this studio and the power of the microphone of the podcast to interview some of the most brilliant real estate investors I can find. A lot here in Denver and many through the BiggerPockets forum. So, pro tip, go to BiggerPockets forums and start networking on there. And so by using this one financial concept, I've been able to scale my portfolio, scale the podcast, scale the businesses. Because let's take a step back from my plan of real estate investing. If you look at every successful business, every successful investor, they have 1 or 2 core things that they do over and over again and get really good at it. Well, this one financial concept was the one thing that I got really good at as well. But here's the secret. I knew nothing about this when I started. I had no clue about this financial concept. I was still trying to figure out what the heck I needed to do. So let's break it down. So like a lot of people, I went to college to go get a good degree, a good job, and eventually a good pension. Well, during my sophomore year, I read Rich Dad, Poor Dad, and that book shattered my mindset. I realized, wow, this is not the path for me. But I did 2 things. I got bit by the real estate bug and it opened my eyes to the world of entrepreneurship. And so this was about 20 years ago and the internet was just starting to grow. So I hopped on the internet trend and built a couple of businesses. And they took off really well. Like I graduated college not needing a job. So I kept building that business, creating some cash flow, had an amazing lifestyle, a great 6-figure income, working 10, 15 hours a week, right? That's the lifestyle everyone wants. So I took the money and the time and went out there and started day trading on stocks and foreign currency. Well, like most people, that did not work out very well for me. I made 0 money on day trading, but I spent a couple years of my time on there. And what happened was I had my eye on the day trading and my business income started dropping off. And then all of a sudden I was in this bad situation of my business income dropped, I had a business partnership issue, my day trading wasn't happening, and all of a sudden I had really very little income coming in. So here I was, about 30 years old, having a lot of success, but really nothing to show for it. But like every good entrepreneur, I took my lesson and said, great, what do I need to do better on my next venture? And what I realized was really 2 things. One is that all business income eventually stops. It goes to 0 at some point. So I don't have to rely on my business income for my long-term retirement. So I had to go out there and build a real estate portfolio. I had to go out there and build a real investable asset. And that was going to be real estate, not day trading. So my goal was to go out there and generate $10,000 a month in income. Not from my business, but from my rental properties for my investments. No matter what happened to me or my business, I'd have just mailbox money coming in from my rental properties. So $10,000 was a goal from an investment standpoint. So I went out there and I started trying to find ways to get into real estate. And I bought an amazing deal. It was a condo in Reno, Nevada, 2-bedroom, 2-bathroom condo for $67,000 at 0% down. So I bought a condo, 0 money into it. So well, I got this property, I'm really focused on building my real estate businesses because I need money to live off right now. I need to be like pay my bills and more money to go out there and invest. So I'm really focused on my businesses. So for a couple years, I'm building those businesses and my rental property is just chugging along. And then I did the math one day. I said, great, I got this one property. How many more do I actually need to get to my goal of $10,000? So at the time, this was cash flowing $1,800 a year. And that was with my mortgage debt and my expenses. Now, once it's paid off, it would cash flow about $8,500 a year. Great, $8,500 a year, getting my goal of $10,000 a month, which is $120,000 a year. Wow, I need 14.2 condos and then pay them off to go out here and achieve my goal of $10,000 a month. So here I was like, I bought this property right. I bought it textbook, 0% down, creative financing, all of that. And you know what? It was making an insignificant milestone towards my goal at $10,000 a month. And that's when I realized that no matter how well I buy it right or how many more properties I buy right, I eventually have to figure out how do I turn buying it right into cash flow for financial freedom. And that's what this one financial concept does. From when I first learned about this one financial concept, it took me about 9 months from hearing about it to fully understanding it. Now I'm gonna give you the 6-minute crash course on it. This concept that changed my world is return on equity, or ROE. So let's break this down, because a lot of people know what return on investment is. That's, hey, you invest something and what is your return on that? Return on equity is not what you put in the money, but how much equity is in the property. Remember, your equity is the value minus your loan balance on there. So, like I said, this is where it doesn't matter how you buy the property, even 0% down like I did, because eventually that infinite return is no longer infinite. Let's talk about return on investment first. And this is what most people are familiar with, ROI, return on investment. So the way you figure that is how much money you make. Great, I made X amount of dollars on the property. That's the numerator. And then the denominator is how much money you invested. Well, I put $0 into there. Well, when you have income over $0, what do you get? You have an infinite return, meaning that, hey, I'm making money because I put nothing in there. So when I understood that I was making an infinite return on there, I was like, why would I ever sell this property? Well, come meet return on equity. Because you know what? Some of this return is, some of it's cash flow, but a lot of it is equity. And there's really two ways you build equity in a property. It's by the prices going up over time. We all know that, hey, you buy a property for $200,000, 5 years later it's worth $300,000. The price appreciates. The second aspect is the debt pay down. When you are paying down part of your mortgage debt, part of that goes towards the principal. It's principal reduction. And so what does that do? It builds equity. So what happens here is part of this return is cash flow for your bank. But this other return becomes equity, which becomes your new denominator in return on equity. And so as you start getting numbers down here, you're no longer getting infinite return. Now, I'm going from an infinite return to a real number. What does that mean? It means my return's actually going down. I'm now making less money that I've invested in the property or generated by my equity. So let's go from concept to the real world example of my condo. So there is my fraction line. Like I said, the top part is the money you make. Now, two things that's really important to understand about real estate investing is that you want to use current numbers. That's why I learned from my mentors is use today's numbers, not what I bought 4 years ago. And you have to look at the 4 ways you make money in real estate. So a few years ago, when I was doing this first ROE analysis on my condo, I put in all 4 ways I was going to make money that year. So $6,900 in appreciation, meaning in 1 year, I should make about $6,900 in appreciation, the price going up. And then about $2,300 that year in debt pay down. And then about $3,000 that year in cash flow. And then about $500 in depreciation or tax benefits. Now, don't get stuck on these numbers here. Just realize I'm taking the 4 ways I'm making money in real estate and calculating that return. Now, if you want a full video breakdown on the 4 ways to make money in real estate, drop below in the comments, hit the like button, and let me and BiggerPockets know you want a dedicated video on here, because this is a whole video on itself. So I got this 4 ways to make money in real estate, and that was about $12,700 for the year. At this point, the property was worth $200,000, $30,000. And I had about a $30,000 mortgage left on there, meaning that my equity was about $200,000 in the property. So if we take $12,700 divided by $200,000, that's about 7%. Now don't kill me in decimals, YouTube comments. I'm rounding here for concepts. That's about a 7% return on my equity. So I went from an infinite return now to making 7% on my money. If I said, hey, you're gonna make 7% on this investment, what's your reaction? Well, 7%, well, I mean, it's not horrible, it's not that great either. What else is like 7%? The stock market. Geez, some CDs and bonds are close to paying 7% now. If I'm dealing with tenants, toilets, liability, I personally want to make more money than 7% on my equity, or a better return on my equity, I should say. The trick here is understanding that this equity in here, this is the key. This is like your real estate piggy bank. We all had piggy banks growing up as a kid. This is your real estate piggy bank. Now, if you have one of those piggy banks, you have to take a hammer to actually break it open. That's kind of like what it is in real estate. To unlock this equity, you got to pull it out and reuse it. Because by pulling this out and reusing it, that's how I get to my cash flow goal. That's how all these like super successful real estate people were getting to their cash flow goals. They're out there optimizing their return equity and putting into new and better returns. Once I understood this and saw what all these successful people were doing, I realized they were just playing real life Monopoly. Now, I'm sure you played Monopoly as a kid growing up, maybe still now too. You get one greenhouse, buy a second greenhouse, buy a third greenhouse, buy a fourth greenhouse, then you get your red hotel, right? That's what the game plays. You just keep going around and around and around and around. Well, by maximized return equity, what you do is rather than going 1, 2, 3, 4 in linear fashion, you skip these three and go straight from one house to the red hotel. In my case, I went from a condo to a fourplex. Condo to a fourplex. So I sold this property, utilized something called a 1031 exchange, and it basically allows me to roll my proceeds without paying taxes. Check BiggerPockets for more details for a 1031. They are super powerful. But I sold this greenhouse, took my $200,000 equity, used that as a down payment on my fourplex or my red hotel. So I took $200,000 that the market gave to me, created for me, and reinvested it into a better asset. Now, here is what's so powerful about this. Like, all right, I get the concept on there. Now let's talk some numbers about here. Because that greenhouse, when I sold it, it was about $3,000 a year in cash flow. And then once the house was paid off, I'd make about $8,500 a year. So $3,000, $8,500. Now, when I bought the fourplex, my annual cash flow was just over $12,000 a year. We'll just say $12,000 for sure, so $1,000 a month. But get this, here is what really matters for achieving financial freedom and true investment success. I went from $8,500 paid off to about $47,000. So this is my future cash flow. And for those of you who know metrics, this is your net operating income, or NOI. This is the amount of cash flow you have when you have rents, minus expenses, but no mortgage debt. So rather than having to go out there and buy, 5 more, 6 more condos to get here, I played Monopoly. I sold the house and got the red hotel and made significant strides forward to achieve my goals. Do you remember my original goal? It was $10,000 a month or $120,000 a year. Math quiz for you. Is $8,500 or $47,000 closer to that $120,000 goal? Of course, this is. So this is the key here. You have to learn return on equity, and you want to keep maximizing, keep growing it until you hit your cash flow goal for paid off properties. So I went from a 7% return equity to a 25% plus return equity on buying this fourplex. So I'm making more money and a lot closer to my goal. Now, I'm gonna jump back to the whiteboard and break down how I scaled this for my own portfolio and into 4 businesses. I can't emphasize enough of how powerful this concept was to me, not just to me as an investor, but also for me as an entrepreneur and a business person. So let's talk about the investment side first. So I just explained to you I went from 1 condo to my fourplex, and by focusing on the same ROE concept, I went from 4 to 9 doors. So that was on my investing side. And what I realized was that, hey, this concept is so powerful, and that no matter what type of real estate investor is out there, you're a flipper, you're a burr, you're wholesaling, you're getting those creative properties, or you're putting down 25, 30% down as a busy landlord, this concept mattered. 6 years ago, I came out to Denver with 0 network and 0 knowledge. And by focusing on this one concept that no one else was talking about, but every real estate investor needed to know, I was able to scale 4 businesses over the last 6 years, far surpassing my $10,000 a month business goal. Every time I go back and think about this, like, hey, what was one of those things that really mattered? It was return on equity. So step 1, go out there and make sure you really understand this return on equity concept. Like I said, it truly took about 9 months to really wrap my head around it. I don't think a few minutes in a YouTube video is gonna get you that full concept. So go back, watch the video. Go back, plug in the BiggerPockets forums. Go back, use BiggerPockets calculators and start running models. Start learning this concept. The second step, actually set some goals. This is something I realized I need to do, and helping hundreds of clients, very few people have clear real estate goals set for themselves. So return equity is a really good tool to help you get there, but you need to know where you're going. That is your goal. I told you my first goal was $10,000 a month. Well, that goal has grown and changed, but make sure you have a goal for what you want your future cash flow number to be, because that's how we can work backwards and use return equity to get to your cash flow goal. Step 3 is really simple. Go apply this to your portfolio. So go out there and take action. And if you don't have a portfolio, great, go start a portfolio. And like I said, whether you house hack or burr or creative financing or put down 25%, you have to come back and learn this return on equity concept. So by really learning this, it's going to accelerate your wealth. And again, 6 years ago, I didn't know this concept. So understand it, implement it, and go scale your investing portfolio. BiggerPockets, I love teaching you. I love working with you. Leave some love in the comments, leave questions. I am happy to dive into numbers on here. See you in the comments.